Hey everybody, it's Will at VIP Mortgage. It's time for your local lender update. We are settling back into that trading range. Last week we had broken above both the 200 and the 50-day moving average, and at that time, if we had seen conditions improve, that gave us room for rates to continue to improve. But markets did what markets do, and that is they kind of stayed where they are. They sank back down a little bit last week, and interestingly, Friday, we opened with the experts telling us to watch out because rates were probably going to get worse, and they didn't. They actually improved a little bit. And that just keeps us bumping along right in the same range we've seen for the last couple, 3 weeks in a row, which tells us that kind of the pricing is built in, the risk, the oil price, all of that is baked in right now. And it's going to take some significant movement to break out of that range. That being said, we're in a pretty good range. If you compare where we are today to October, November, December last year, we're pretty similar right now. So we saw a little bit of improvement beyond that early in the year, but we've kind of come back to that range. Significantly, the Fed will have their final meeting with Jerome Powell as the chairman this week. That meeting probably won't mean much because the market's already looking forward to the next Fed chair, Kevin Warsh, and sometimes the comments from the Fed chair make a difference after they do their meeting. This week, those comments probably won't mean anything because we're going to have a different philosophy coming into the Fed. Now, the new Fed chairman is just one member. He doesn't get a stronger vote. But what we're looking to see is if his views can be persuasive to the other Fed governors. He does come from a different school economically than the last many Fed chairs, and it's kind of a more old school approach. And so we'll see how that works in our current environment where quantitative easing and money supply and all of that has been a big focus, and I think there'll be a little bit of a shift in those kind of policy recommendations. One thing that I do like that I heard during his confirmation hearings is that he wants the Fed to be less public. He doesn't want them to do press conferences and maybe do less in the forward-looking guidance and all of that kind of thing, and more focus on the technicals and what tools they should be using, and just not be so media oriented. I think it might be a good thing for the Fed to be less in the focus of what's going on in our economy, and hopefully bring the actual economic data to the forefront and what's going on rather than what policymakers are saying. So that'll be an interesting shift. I think we'll probably stay stable for right now, again, unless we get some really good news or really bad news regarding the war in Iran. If there's anything we can do for you, give me a call, 719-232-7553.